economics.
Welcome. We are a team of Wrocław University of Economics. My name is Kamil, and I'm pleased to introduce to you Patrycja, Marcin, Mateusz, and Krzysztof. We are truly honored to be here today among the best research teams and the brightest minds. We would like to present you the outcome of our research on Comarch SA. Comarch is one of the biggest Polish IT companies operating on a global scale. It provides IT services, software, and hardware for the customers from a wide range of business sectors. Services and software state for about 90% of company's revenues. Once obtained business contract, Comarch designs and implements specific IT system for the customer, capturing significant portion of the margin. Then it provides IT-related services, which assure the company with the constant revenue inflow for the following periods. Apart from the operational part of the business, Comarch conducts well-thought CSR strategy, where it supports local community through development of eco-friendly estates, educational programs, and sponsorship of a sport club, which we regard as a CSR activity rather than investment. For Comarch stock, we issue buy recommendation with a target price of 148 Polish zloty to be realized within the year. Our recommendation is based on the following value drivers. Significant investment into tangible fixed asset as the company increases its office space and develops data center, higher than competitors' R&D spending to seek further growth through development of products, as well as company's flexibility on the revenue side, taking into account its diversified sales structure.
Global IT spending in 2015 reached $3.5 trillion, and it is predicted to grow by 6% year-over-year. We assume that the main drivers of IT market will be Internet of Things, cloud computing, and data centers. As it is displayed on the slide, Comarch is strongly present in all of these sectors. As we can see from the competition matrix, Comarch is positioned as a big-size software house with highly diversified products portfolio and great number of covered sectors. We can also easily highlight three main types of Comarch competitors. First one are innovative IT services providers, which are highly specialized in one particular sector. Second one are medium-sized software houses like Polish Signity or Swedish Tieto. Nevertheless, the major and direct Comarch rivals are international and well-diversified IT players, such as Atos or SAP. In order to maintain and even strengthen Comarch's established position, the company is going to increase its revenues from two most prospective sectors. First one is TMT Latin America market, in which Comarch is able to use its previously gained rich experience from TMT area. Second one is healthcare market, where Comarch will offer its unique medical solutions like home KTG. Moreover, in this year, Comarch is going to launch its new investment in Poland, the IT Lab, where both hardware and software solutions connected with Internet of Things technology will be developed. By this unique investment, Comarch might become a global leader in this specific but very perspective area.
Now we would like to look more deeply into the company's financials. Comarch, contrary to its competitors, does not pursue significant acquisitions. This results firstly in growth focused on R&D, which the last 5 years amounted to 8.4% CAGR, and secondly, in low value of goodwill, positively affecting the quality of the balance sheet. During the last 5 years, while its competitors experienced a decline in margins, the company managed to significantly improve its profitability, from 8% to 13.5% EBITDA margin. Consequently, its margins are currently overperforming most of its competitors in Poland and Europe, due to already mentioned successful R&D projects and student-based workforce strategy. The thing which distinguishes Comarch from other software houses are high investments in property, plant equipment, which is visible on the graph presenting the company's asset structure. Investments in data centers increase the competitiveness of company's products and enable to charge tax benefits thanks to operating in special economic zone. The company tends to maintain rather conservative financing strategy, with 12% long-term debt ratio being below the international IT market average. Comarch has significant and stable cash flow generating capacity, and this is mainly driven by the low level of cash fixed costs and efficient receivables turnover, exceeding Polish IT benchmark by over 15%. However, significant investments financed mostly by own resources have recently required abandoning the dividend-paying policy. Basing on Comarch's outperforming profitability and historical data, we expect that the company will return to dividend paying in 2018 with 35% payout ratio.
We evaluated Comarch by using discounted cash flow method and multiples analysis. The first one will be presented by going through the main components of price per share. The company's core activity will be driven by rising revenues of 8% annually due to growing demand on IT services and hardware markets. As we can see on the pie chart, the value will be created by maintaining strong position in SME and telecommunication sectors, adding 60 zlotys of value per share. It is crucial to mention particular focus on dynamic healthcare sector, which is expected to generate 11 zlotys of value per share. The company's growth will be supported by extensive investments in Poland and France, alongside with rising employment and salaries of 5% annually each. The value of operation was adjusted for non-operating assets and other operating assets, such as investment and support segment, tax benefits resulting from operating in special economic zone in Poland, and recently acquired minority stake in a firm operating in North America called Thanks Again. Moving on to multiples valuation, we took under analysis 7 Polish and 16 international software houses, which were similar in terms of business profile, product diversification, and financial structure. The valuation was conducted on 3 multiples, each gaining the same weight, and foreign peers were given 25% of importance, with a rationale of Comarch's 50% discounts to its internationals caused by the intensive M&A strategy and better performing foreign markets. Giving 50% of weight to each method, we came up with the price per share of 148 Polish zlotys, providing 28% of upside potential.
Now, let's summarize investment risks. The risk of both highest impact and probability is shortage of IT specialists and growing costs of hiring them. Growing IT market results in increasing demand for developers. In Poland, it has grown 30% over the last 3 years. According to this fact, Polish IT salaries are growing continuously. On average, they are already 3 times higher than salaries in Polish business sector. Labor costs constitutes for half of companies' operational costs. Consequently, this is one of main value drivers of Comarch, which is visible on the sensitivity analysis. Comarch offsets the risk being a company of first choice among IT students. Moreover, it is planning to hire relatively cheaper yet qualified Ukrainian developers. Second important risk is associated with shareholder structure dominated by Mr. Filipiak, CEO and founder of Comarch. Filipiak possesses control over company, having 41% of votes. Such a shareholder structure has been stable, yet it implies 2 risks: serious illness or retirement of Mr. Filipiak and disposal of his shares. Both of mentioned might result in downside pressure on stock price. We consider disposal of shares unlikely, yet illness and retirement should be kept in mind as Filipiak is in his 60s. Finally, we should encounter remaining operational risks. Nevertheless, with companies' experienced management and international cooperatives, they are rather negligible.
To conclude, we issue buy recommendation supported by diversified sales structure with a further growth strategy based on the growing markets, sound level of operational margins despite human capital intensive market and significant R&D expenses, investment into value generating assets such as data centers, and highly experienced management. As for the potential value triggers, we would like to highlight the result of IT tender of government's pension fund, which if Comarch wins, would be driving our valuation up to 154 Polish zloty. Among other factors, we include possible changes of Poland's credit rating, shifts in shareholder structure, and development of new IT solutions. Thank you for